That's coming up. All right, 2022 has been tough on our budgets and our investments, right? Families have had to make some really difficult decisions. So how do we make sure we're positioned well for what's ahead in 2023? Joining us now live, Seth Kaplan, Managing Director at Baird Wealth Management. Seth, thanks so much for joining us this morning. I appreciate it.
Good morning.
All right, so let's start. I want to kind of focus in two areas, for the business owners and then for the personal. For business owners, many small, medium, and business owners here in Sacramento, what should they be doing as we head toward the end of the year?
For tax planning, much of it comes down to how this year stacks up compared to maybe a normal year. If you're a business and you're having a good year from an income perspective, you may want to take efforts to try to reduce your taxable income. So oftentimes, some strategies that will work is to prepay for expenses that would otherwise be deductible. If you have a need for business equipment, you can purchase it and typically expense it. And then on the income side, if you have some control over when you perhaps invoice your clients, maybe wait to send it out until after the new year, and that way that income does not come in.
So great advice there. What if you're one of the businesses, well, I should say, one of the many businesses who've had a difficult year and you're trying to make sure and you keep every penny?
In that regard, oftentimes as a business owner, you may have an opportunity to collect income from other clients of yours who are trying to prepay expenses, and that's some efforts that can bring in income.
Great.
So in that regards, also trying to cut back on your expenses and waiting to pay them until next year.
It's also a great time, if you're a business, or let's transition to your personal finances. This is a great time, always important. Some people say it's tedious, they don't like to do it, but you got to check your 401k and your year-to-date holdings. This is the time when you want to make moves to minimize the pain, right? Yeah,
the IRS allows you to put a certain amount of money away pre-tax into retirement accounts if you have employment income. So you would want to check before year end to see if you're on track. At the same time, you want to see if your tax withholding is on track, because you don't want to under withhold, which could result in penalties. And then this has been a tough year for the financial markets. So there are opportunities potentially to do what's called tax loss harvesting. That can reduce your investment income, which can be of benefit in a year like this.
So there are a lot of options. I think a lot of times people like me, or like a lot of our viewers, think that, oh, I'm not going to be able, I just have to take the hit. But if you're careful, Seth, and you look at things as challenging as it may be or tedious, this is where you can save a lot of money or a lot of pain when it comes to doing your taxes next year. This week and next week after Christmas, you need to be working overtime on this stuff, right?
Financial planning involves a lot of things, part of which requires looking at the tax picture, and to the extent that there are things that you can do that can reduce your taxable income, you want to take advantage of it. But it's also to recognize that the tax picture isn't a one-year event, it's a multi-year event. That's why you want to assess it this year compared to what you envision in future years as well.
And when you talk about that multi-year planning, when we're trying to plan for next year, a lot of the financial experts are pointing to next year, we might feel a little bit more of the recession, given what the Fed's doing. We're having some good signs, but also some scary signs. What do you anticipate, or what moves should we be making after the first of the year as we move towards tax time?
The financial markets provide different opportunities, and for anyone who has a long time horizon, I'm a big advocate of take advantage of market volatility, add to your 401ks, do things like that, especially if you don't anticipate needing the money for 5 or 10 years, because essentially, as we go through rough patches, you have opportunity to buy good companies when they're on sale.
And then they go up from there significantly, right about, hopefully, if you can time it right before you retire, you can pull out. Hey, Seth, thanks so much. As always, it's an important time of year that we talk about this stuff and make sure our viewers know about it. Thanks for joining us this morning. Seth Kaplan with Baird Wealth Management. Seth, thank you.
You got it.
All right, 8:48 right now. Let's get over.